Hey guys and girls, it's Nathan Birch here, answering questions from last night's webinar, which, as I said to you guys in the webinar, I'll get around and try and answer a lot of your questions on your YouTube videos so you can all benefit from that. If you would like to be a part of one of our webinars, find out more information at facebook.com/beinvested.com.au. The question I've got here is, what's up boys? Looking super. Question. How do you manage the risk that interest rates could rise above your ability to service the mortgage repayments, particularly if you have multiple properties or with mortgage repayments you need to make? Cheers, Shane. Good question, Shane. It's something I always thought about from the start when investing in the property, and it's something that I do take a conscious effort to make sure that when I purchase properties, I look at, I try and work my calculations on a little bit of a higher interest rate. So for example, at the moment, interest rates are under 5%, they're more around the 4.5% interest rate. I try and work on about 5.5% interest rate, so I've got a couple of interest rate increases as a buffer. Also forecast as to where the interest rates will go. That's something I do personally myself, and it's taken me, a long time to come up with that formula. And I'm generally correct with each month when I make interest rate calls, unlike those economists that like to put out reports. It's something that, when I first started investing, I got scared. Interest rates were nearly double digits, and a lot of negativity around at that point. And I fixed interest rates and caught myself out at a high interest rate from not understanding that part correctly. When building a property portfolio, just depending on what part of your property investing journey you're at, it's important to understand those risks. Also important to understand just that interest rates could go up. Also, rents do rise in time. Lots of things do change. Interest rates can just go down as much as they can go up. Looking at my personal position, thinking about when I first started, I used to fix a couple of interest rates when I had the opportunity to, but the banks always beat me because I could see that they have more tools at their disposal than what I did. Looking at interest rates, it's something I've never been caught out. I don't plan on being caught out. It's important that when you're buying properties, I've got 3 keys that I stick to. One is buying the property below market value, making sure it's got a good upside for growth, and making sure it's got a good cash flow. The cash flow side of things means that you won't do your ass when over leveraging yourself. If I'm pulling equity out of a property, let's say I bought a property and I'm pulling 50 grand out of that, and I'm using that as 50k deposit into another property, I work the cash flow based on that new property at 100% equity or loan value, because I want to understand how that's going to affect my cash flow position. If interest rates do go up, how high can they go up? What sort of position will I be at? Understanding that if you look at a property portfolio of 20 properties, 30 properties, 50 properties, interest rates will go up by 1%, 2%, 3%, 4%. No second job is going to help you out from that perspective on covering the gap. So it's important to hedge your bets. If you do want to have a bit of a sleep at night factor, there is opportunity of fixing the interest rates. There's also the opportunities that rents do go up. There is opportunity of deleveraging yourself a little bit and being able to sell off a few properties and paying down some debt and all those sorts of things. So really important to treat your property investing like a business and make sure that you look at the numbers regularly and look at what could be your worst case scenario, what could be your best case scenario. A lot of people just go, this should be okay, it's a nice property, I could potentially do this and hopefully do that. You need to know your numbers correctly. Hopefully that answers your question, Shane, and we'll catch up soon. If you do have any questions, you can post them on the Facebook page. You can email us at admin@binvested.com.au, or you can call us on 1300 367 925. Have an awesome day.